Good morning, everybody. This is the live market open for December 10th. It's Thursday. I'm Yohay Elam of ForexCrunch and Market Movers podcast, doing the show as usual for FX Street. Today we have, as usual, we'll do the recent developments, charts and levels next 24 hours, and your questions. And today we'll also have the Swiss National Bank decision at the bottom of the hour at 8:30 GMT. We'll cover that live. We'll do a small preview as well. And of course, your questions are always welcome. So if you can't see the chat box, although I can see a lot of you already in the chat, so go to tlk.io/fxstreet-forex-live-video. Okay, we had a lot of action in the last 24 hours. First of all, we had a continued struggle with oil prices. So we had a drawdown in inventories. Oil went out of inventories, and that's change. So you would expect oil prices to bounce back up. That did happen to some extent, but then they began struggling and fell down once again. And it's already moving. This crisis of commodities, this global slump, global doom and gloom is already felt in quite a few other markets. So let's just start with the majors. First of all, euro dollar, okay. Finally, we had a break above 110, the level we talked about many times as strong resistance. After the Draghi drag, after the Draghi disappointment, we had an attempt right here to move up, and the pair went up to 109.80 and then fell, even dipped below 108, and then gradually began climbing. Yesterday, we had a breakout and we reached higher ground. Now we're seeing the pair re-struggling with 110, which is not that strong anymore after the breakout. Further resistance 110.70. Okay, so it's mostly the euro working as a safe haven currency, funding currency, very low interest rate, or negative if you wish. It's a negative interest rate in the eurozone, and the ECB is printing money. So in good times, money flows out of the eurozone to go into more risky assets, and in times of trouble like these, when commodity slump and worries about global growth, things like that, money flows back in. Pound dollar here, I find it a bit harder to explain this. It's mostly related to the sell-off of the US dollar. It's sort of the pound got a nice boost from that as well, from the rise in the euro, but the pound is not a safe haven currency. A pair that is a safe haven currency is the Japanese yen. And finally here, after we talked so many times about this range of 122.20 to 123.60, yesterday we had an impressive breakdown, got close even to 121. Since then we had some kind of bounce, but note that despite this bounce, the pair is certainly keeping a safe distance from 122.20, currently only at 121.70. Okay, the low that we've seen yesterday, I would say this is not such an important line. No. So it's also worth watching 121.90 on the top side. But also, let's draw another line on the low that we've seen here at 121.10. This is the current range of the pair. This may change quickly. The pair might fall even lower or move back up. And it's still looking for a new direction. Okay, if the doom and gloom atmosphere continues, we could see it fall further because the yen is a safe haven currency. Anyway, we had a very impressive break out of this range. In dollar yen, we have long periods of ranges and then these sudden moves, and now we had that yesterday. Okay, as we've seen also breakouts in other currencies. Pound dollar, a bit more getting carried away, broke above 151.60, which we mentioned several times, and under 152. So while I can't provide a really superb explanation about what's going on with the pound, at least the ranges here are very clear, very nice technical behavior. Okay, dollar CAD, we had it establish a resistance line, if you wish, a double top at 106.20. Okay, we had another attempt to move that yesterday with all this mess in oil prices. Now we're a bit lower, 135.60. 134.60 is still support after working as resistance several times. But it's very far away. Canadian dollar is still beaten, right, because of oil prices. And we had some news also about balancing the budget from Canada, but it had less of an impact. More of an impact we had from the Bank of Canada earlier this week, which talked about the lower bound for interest rates being minus 0.5%, minus 0.50. Currently, the rate is minus 0.50. Okay, so sorry, currently it's plus, yeah, so it could go to minus. The Bank of Canada doesn't intend to cut rates, but who knows, anything can happen. All right. Now let's talk about Australian dollar. Australian dollar struggled like other commodity currencies, but then got this boost back up. I guess you know what happened there. We had an excellent jobs report in Australia. Oh, sorry for this miss. Let's see if we can have the Australian figures. Why can't I see them on the screen? Anyway, yeah, we had Australian jobs figures in during the night. Excellent. Once again, unemployment rate dropped to 5.8%. Okay, despite a rise in the participation rate to 65.3%. Remember, it's much higher than in the United States. Employment change. It was expected to fall by 10,000. It jumped by 71,000. Last month we had a jump of 56,000. All in all, many analysts in Australia raise eyebrows, say that the Bureau of Statistics there is making some mistakes in calculations and things like that. I'll get to the Kiwi soon. But it doesn't really matter for the Aussie. Even if the news is exaggerated, unemployment or employment in Australia is still going in the right direction. Okay. So there are good reasons for the Reserve Bank of Australia to be relaxed, to be happy with the current situation of the local economy, despite slowdown in China, despite lower commodity prices. We're seeing the employment situation in Australia, other sectors doing well. Yet again, some people say it's too good to be true, but it's good enough for the Aussie to rise. What happened in the Kiwi, you ask? And there we also had news. We had a rate decision yesterday in New Zealand. As expected, they cut the interest rates from 2.75 to 2.5. You would expect the currency to fall, right? Well, as I said yesterday in the preview, there were two things to watch. First of all, we also had yesterday there are two things to watch. First of all, what they intend to do next. So next, we have further rate decisions in the new year. And they said that interest rates are expected to remain steady for some time, okay? So this is bullish. If they're not about to cut rates further below the 2.5 level, and 2.5 is where we reached last year in the rate cut cycle before rates went up a bit, okay? Then it's good news for the Kiwi, right? Second thing, what they said about the exchange rate. The exchange rate, they said it is unhelpful, but they didn't say it's unjustified. Okay, there is a difference here in semantics. Unhelpful means they are not really happy with it, but sort of accepting it. And unjustified means they're furiated with the exchange rate, and perhaps ready to intervene. We know that the Reserve Bank of New Zealand intervened in the past. So all in all, in Kiwi dollar, we had on one hand a rate cut, but on the other hand, they said that they're going to keep probably rates unchanged. Okay, it's not a commitment, but that's sort of sending a signal to markets. And second thing, that they're not really worried about the recent rise in the exchange rate. So we had the exchange rate rise. We had the range of 66 to 67, and eventually we had, well, immediately after the release, we had it move higher, and it even challenged the highs of 67.90, which is resistance. Further resistance is only at 69. 67 is support. I think we can remove this line. Okay, so I hope this provides an answer to what you asked about the Kiwi. It was also big news overnight. Jack says, Aussie government making mistakes, adding and subtracting. Yeah, maybe numbers are going the other way there in the land down under. Anyway, we know that the Australian economy is in general doing well. Also, when the Aussie dollar was falling, it's a very rich country, unemployment is low and things like that. Question follow up on the Kiwi. Governor Wheeler states he wants a lower currency price. Yeah, they said that it is unhelpful, okay, which means they're not happy with it, the recent rise, because we had it around 63, 62 cents. But there is a difference between unhelpful and unjustified or unsustainable. And these are words they used in the past, okay? So I think they carefully chose their words about the exchange rate, about unhelpful against unjustified, and they also carefully selected what they said about further cuts. Okay, so they are open to cutting rates if needed, and some analysts see a rate cut in New Zealand in March 2016, but their general expectation from Governor Wheeler, from his colleagues at the RBNZ, are for interest rates to remain steady. And steady means higher interest rate than in the United States, in the Eurozone, in Japan, and that's supportive of the Kiwi. Okay, so these are the big developments. Oil prices continue struggling. RBNZ cuts and signals a pause. Australian jobs came out better than expected. Okay, and soon today I'm going to talk about another currency, about the Swiss franc. Okay, because we have a rate decision in Switzerland in around 15 minutes. So dollar Swiss moved lower, much lower, found itself here. Oh, wait, what's going on? Anyway, 98.50. Okay, finding here support at 98.40, and 99 is resistance. Parity is a line to watch, even though it's not that strong. Maybe we'll move it right here. It would be a better place. So the Swiss franc, first of all, it enjoyed safe haven flows, even though it's not such a safe haven currency as it used to be maybe 5 years ago, 10 years ago. All right, but it enjoyed safe haven flows. In addition, it traded higher, the Swiss franc alongside the euro. Okay, we're seeing here Euro Swiss, very, very narrow ranges on the 108 handle, support at 107.60, resistance 109, 110 maybe, 110, but all in all, very, very narrow ranges. Now we have the Swiss National Bank decision coming up quite soon. Let's talk a bit about that. Okay. The Swiss National Bank makes rate decisions only once every 3 months, only once a quarter, in December, like now, March, June, and September. In September 2011, the Swiss National Bank decided that the franc is too strong, and instead of intervening sporadically, it decided to set a peg. Then Euro Swiss was trading around parity, and they set a level of, or even much lower than parity. They set a level of 120. Okay, they managed to successfully maintain this currency peg. Just a second. For a long time, but because the euro was the euro was deteriorating in 2014, the European Central Bank decided to set negative interest rates, began talking about QE, euro dollar began falling, euro Swiss was under pressure. Okay, it became clear that the European Central Bank was about to announce QE. 1 week before the European Central Bank's decision, we had what's now referred to as the SN bomb, the Swiss National Bank bomb. They decided on one morning on January 15th to remove this floor under Euro Swiss. Euro Swiss fell from 120 to maybe 85 cents, maybe one, was very, very low liquidity. Many traders were burnt out. Some had negative balances. Some brokers forgave them, some didn't. Some brokers went bust because of this. Alpera UK is one of the examples. Anyway, it wasn't a planned rate decision. they decided not only to remove the peg, but also to set lower interest rates at minus 0.75, which is the current rate, okay? So they began the year with the bank, and now it's their last official rate decision for the year. So some expect them. What did we have last week from the ECB? And just 1 week ago, we had the ECB deciding to cut the negative deposit rate by 10 basis points, less than expected, but they still cut it. So most analysts expect no change today. The Swiss National Bank leaves the interest rate at minus 0.75, pledging to intervene as much as needed. It's no secret that they're intervening in markets. They also told us back in January and along these months in speeches and in rate decisions that they're intervening, right? And so most analysts expect that. Other ones, well, only a few, expect them to cut the interest rate from minus 0.75 to minus 1% to adjust to the ECB's current rate cut and to adjust to future action from the ECB, because the ECB left the door open to more action, and we know that Draghi was disappointed, and perhaps he's ready to do more once he has political backing, okay? So we're expecting this decision at 8:30 GMT. That's around 15 minutes from now, and we'll cover it live. We'll have keep you up to speed with the news. Okay. Now let's take a look at other events we have today on the agenda. Trade balance in the UK at 9:30 GMT. Let's look at the calendar. It's not such a big event. We had, let's talk about other smaller events. We had industrial output coming out from France, as you can see here, plus 0.5. Consumer, the CPI came out worse than expected in France. It feeds into the final CPI in the Eurozone, minus 0.2%. Yeah, CPI, not so interesting. And the Swiss rate decision right here at 8:30 GMT, 9:30 here in the old continent. Trade balance in the UK that I mentioned. Why doesn't it? Here, sorry. Sorry. So it's expected to show a deficit. As usual, the UK traditionally has a deficit in its current account, bigger than last time, to 9.7 billion pounds. That's one event to look at for the pound. It's not that important, but it still has an impact. It's even less important today because we have the Bank of England's rate decision. Thanks for mentioning that. First of all, I'll mention that we're going to cover that live as well in a separate broadcast. Mauricio, Carrillo, Valeria, Benarik, and myself. The broadcast begins at 11:45 GMT. They're not expected to change interest rates. Let's do a small preview for that as well. But they are expected to release, of course, the meeting minutes, and that's the most important thing to watch, okay? The Bank of England makes decision via its Monetary Policy Committee, a committee of 9 people, including Governor Carney. These 9 members vote on various decisions. In the past 3 or 4 months, we had 8 members, including Governor Carney, vote for no change, and 1 member, Ian McCafferty, if you wish, a Scottish rebel, I'm not sure he's Scottish, but he has a Scottish last name, voting for rate hike. Okay, he's a hawk. We have others, like Andy Haldane, which is a dove. He voted with the majority, but we know that if the Bank of England decides to raise rates, perhaps he'll vote against it. Anyway, we have a split. We have independent members. They vote differently. Okay. The first thing to watch for today in the rate decision is how members vote. Okay. If it continues to be 8-1, it's positive for the British pound. Why is it positive for the British pound? Because we had recently dovish remarks from the Bank of England, worried about inflation, things like that. We have doubts that inflation is really going to rise, despite the fact that wages are rising 3% year over year, which is great news. Okay, so if we have still 1 member, Ian McCafferty, voting for rate hike, it's relatively positive for the British pound. If we have a unanimous decision, 9-0, voting for keeping the policy unchanged, then probably we'll have an immediate reaction of a weaker pound, okay? But that's the immediate reaction. But the meeting minutes include more figures about how they see inflation, growth, what's the path of interest rates, things like that. The internal discussions which are released at the same time. And there's a huge room for nuances, for analysis, for choppy reaction in pound dollar, euro pound, pound yen, you name it. And it can turn out differently. So I have immediate reaction from the voting pattern, 8-1 positive pound, 9-0 negative pound, okay, and then what they say in the meeting minutes, okay. So that's the third rate decision in 24 hours. We had the Reserve Bank of New Zealand cutting rates but making it a hawkish cut, and we'll soon have the Swiss National Bank and then the Bank of England. In addition, we have today, as usual, every Thursday in the United States, US jobless claims. Let's see what's expected there. By the way, they also decide on the level of quantitative easing in the UK, which is expected to remain unchanged at 375 billion pounds. Initial jobless claims in the US expected to remain unchanged at 269,000, which is relatively low, relatively good. Continued jobless claims expected to slide just a bit to 2.152. We also have import prices and export prices in the United States. What's important is import prices, because it impacts inflation. So the month-over-month change minus 0.7 is expected after minus 0.5. Okay, sort of second-tier figures, but still of importance. Okay, I see. While I'm talking about various stuff, euro is dropping. Okay. So Euro Swiss is already dropping 108.29, not that big. Euro dollar is dropping much more. Is it related to the Swiss National Bank? Let me try to find some information on that. I doubt it's related, but let's check it out. But maybe there's some early choppiness. Take some news. Well, maybe it is related to the Swiss National Bank, just some early action. Maybe some expect the Swiss National Bank, well, most expect them not to act. And if they don't act, it's sort of supportive of the euro. So, because if they cut rates and talk about intervention, if they go all in, it means positive news for the euro, because the euro gets some support. And if they don't do anything, it's negative for the euro. But if you want to see the reaction on the euro, we're also seeing pound dollar slide just a bit. So I see it more at the moment as also dollar yen moving higher. So it's more strengthening of the dollar now, right, than action in the Swiss franc. The dollar is strengthening against Swiss franc. So I think the tension is still high, and it's more some kind of correction in the US dollar after the big sell-off yesterday against the euro, against the yen. So we're seeing a reversal of the moves rather than positioning, last-minute positioning. Okay. We have just under 5 minutes to the decision of the Swiss National Bank. So we'll cover that. I'll try to keep you up to speed with all the news. Any questions at the moment? We're seeing strengthening. Strengthening of the US dollar across the board, but also the euro is showing more weakness. A news event is a perfect issue for Swiss intervention. they take every opportunity they can for intervening. The best pair to follow for this rate decision is the Euro Swiss, because that's the pair they care about. If we look at the geography, of course, Switzerland is surrounded by Eurozone countries. Most of the trade goes there. Okay. So, okay, we have a few more minutes. Let's maybe talk about, let's do a quick recap of what we had so far this week. We had Japanese GDP coming out better than expected, supporting the yen, perhaps also providing the ground for the strengthening of the yen, but it was more a collapse of the dollar. Chinese trade balance a bit worrying. By the way, speaking of China, we had some the Chinese yuan is devaluating just a bit. US jolts came out more or less as expected. I see a question here about US dollar is going to rise more. Aussie against the US dollar are going to rise more. It depends a lot on China, just what I mentioned. Now, on one hand, the Australian economy is doing well, employment is rising, things look good. On the other hand, China is looking weak. Chinese yuan is devaluing, and there are doubts over there. I think that if the Fed indeed raises rates next week, you could see Aussie dollar slide. Well, the US dollar is strengthening across the board, but later, I believe the Aussie has potential to recover more than other currencies. How do you trade the rate decision? The int rate decision? You mean the Swiss one? Well, I would wait for the news. If they cut rates, it's bad for the Swiss franc and positive for the euro. If they don't cut rates, it's the other way around. But most expect no cut in rates. They're expected to leave it again. Quick last moment preview. Swiss National Bank expected to leave the rates unchanged at minus 0.75. That's more or less priced in. That's because they have some breathing room because of the ECB. But if they do cut the rates from minus 0.75 to minus 1, it's of course bad for the Swiss franc, especially against the euro. We're seeing here a fall of 1 to 108.10. I don't see any news coming out just yet. Maybe it's positioning. As we speak, we're seeing Euro Swiss fall. So the Swiss franc is strengthening, also against the US dollar. Even though according to my clock, okay, the news is out. It's just 1:30. Let me try to get the news. Anyway, I think we have no cut. Let's see. Yeah, the Swiss National Bank decided to leave the rates unchanged at minus 0.75, as expected. Let's see if we can get some headlines from the press conference. And this means that the Swiss franc is strengthening against the euro. Right here, we're seeing it fall, still within the range. It's important to remember that. Okay, 108.20 is still within range. Support at 107.60. I believe the Swiss National Bank will intervene if we see Euro Swiss falling out to these kind of levels, and resistance maybe here at 108.70. So no change from the Swiss National Bank. Left the rates unchanged. Let's look at dollar Swiss. So we have some choppiness here, but dollar Swiss eventually rising just a bit. So indirectly affecting euro dollar, we see a halt in the fall of euro dollar. Okay. Now we're seeing an opposite move. Some kind of choppy action here. 108.25. Press conference coming up. So some choppy moves here because of the Swiss National Bank. 108.25 at the moment. Okay. Well within the range. So now some kind of re-weakening of the Swiss franc. Perhaps they're accompanying their decision with intervention to weaken the franc. You can never rule out anything out there. Anyway, we're seeing in dollar Swiss, the dollar strengthening against the franc. I suspect that they accompanied their rate decision of no change with some kind of intervention to mitigate any undesired strengthening of their local currency. Euro dollar now resuming its small downtrend that we've seen since early in the show. Okay, since early in the day, we're seeing it erode its gains seen yesterday. Okay, so another look at Euro Swiss. Euro Swiss did fall. That means strengthening of the Swiss franc because they decided not to cut rates. But now we're seeing it bounce back up, still below the higher levels. So we could have had an intervention from the Swiss National Bank to accompany this move. If you want to see more levels, the 3-month LIBOR rate, lower target is 125, upper target minus 0.25, and the deposit rate, which is the most important one, like we had it from the ECB at minus 0.75. Okay, so no changes in any of the Swiss rates. The most important one to watch is of course, negative deposit rate, just like in the Eurozone. Okay, so 98.54 on dollar Swiss, above support at 98.40, resistance at 99. Euro Swiss had this nice move to the downside, but reached exactly 108. This looks very, very suspicious. We had the round level of 108 touched after the disappointment from the ECB, from the SNB, Swiss National Bank. Now, and from there it bounced back up, very round number. I'm very suspicious that we had some kind of intervention here. Okay, no change in rates, and we'll have a press conference later on. Let's see if they say anything new, but the main news is out, no change in rates, okay? All right, do you have any questions about the Swiss National Bank, about other moves in markets? In the meantime, we have some forecasts released by the SNB. They see GDP is close to 1% this year in 2015. I guess it's easier to make predictions now for 2015 as it's close to the end, right? Anyway, do you have any questions? Seen no change in the Swiss rates. Euro Swiss fell to 108 and bounced from there back up. Very round level. Let's talk about more things in the meantime. Also, euro dollar stabilizing. So we talked beforehand about events for this week. Said Japanese GDP better than expected. Chinese trade balance disappointing. JOLTS as expected. New Zealand rate decision hawkish cut, if you wish. Stronger Kiwi. Australian jobs report amazing. Too good to be true, perhaps. And stronger Aussie. Swiss rate decision, no change. Slightly stronger Swiss franc, no cut there. UK rate decision later on. We did a small preview. Watch out for the voting pattern, 8-1, pound positive, 9-0, pound negative. And tomorrow we have a bit more sunshine on the US dollar. In terms of events, we have two consumer-related figures. We have the retail sales for November. That could give us a view on Black Friday shopping, and consumer confidence the early preliminary release by the University of Michigan for December. So a look at Christmas shopping, if you wish. All in all, this is for the US dollar, it's a transition week. Last week we had the non-farm payrolls, which came out a bit better than expected. And we had the, let's see if I have the slide here. Yeah, 211,000 jobs gained. Positive revision, 35,000 wages went up as expected, 0.2 month over month, 2.3 over year. And the unemployment rate remains low with a small rise in the participation rate. This was the most important indicator. And we had Janet Yellen saying that delaying the liftoff has risks, hinting we are going to hike. But remember, it is we are going to hike, and then we are going to raise rates very, very slowly in 2016. I wrote yesterday an article on my site on ForexCrunch asking will the dollar continue strengthening in 2016? That came out on a day when the dollar was weakening, but anyway, it's a big question. We'll have some previews for the year and for Q1 towards the end of the year. All right. Do you have any questions? Oh, I was saying that it's a transition week, of course, between the NFP and Yellen. And next week, it's, of course, the important rate decision in the United States. We will not stop talking about that already tomorrow and, of course, on Monday, Tuesday, and, of course, on Wednesday and all week. What are today's buy sell for Euro Swiss? I don't have the order board, but sorry, Euro Swiss. Sorry, dollar Swiss. But as I said, the levels I'm watching here are 98.40 more or less. Sorry, no, sorry, 98.15. Maybe perhaps sort of wider support because we have wider moves, or to put it. Yeah, let's put it 98.20 is support, resistance at 99. Okay, what pairs to watch today? Asks Jax as usual. Well, pound dollar and any related pound pairs, because of the rate decision. Now that we have the Swiss National Bank decision behind us, the pairs to watch are related to the pound because of the rate decision in the UK, and also, as in recent days, watch the Canadian dollar because of oil prices. Okay, pound dollar at the moment flirting with support there at 151.60, resistance 152, then 152.50, further support 151.15, 150, 149.50. Okay, we didn't talk about other pound pairs, so yesterday we had. Earlier this week we had euro pound reach higher levels. Now it's falling back down, and we're seeing it now at 72.40. Support is at 71.60 and 70.40. Okay. Pound yen, one of your favorites. It lost its charm, its technical charm. It became much more choppy, dipping there below 183.90. I would say this line is gone. 183.70 is a better line now. 184.30, which was a very nice double bottom here. It's also quite shattered. 186, 188.10, and these are the lines to watch. On the downside, we have 183.30. Okay. BOE not expected to change. Waiting for the Fed. Well, everybody's waiting for the Fed for a very long time, and this tension also causes volatility. I think it's part of the US dollar sell-off yesterday, repositioning. But the Bank of England does have an impact on markets, especially look for the voting pattern, as I mentioned. Will the BOE decision influence also euro, and how? Good question. I don't have a straight immediate answer, but let's think. If the Bank of England is more hawkish, that implies that it's expecting also an improvement in the eurozone. But if it's more bearish, it's expecting a deterioration in the eurozone. But maybe perhaps to better answer your question, we should look at how the meeting minutes in the Bank of England refer to the eurozone. Okay, because the meeting minutes, this is a document which is quite detailed, and we should have there a reference to the eurozone, which is Britain's main trading partner. Okay, so if we have any kind of reference, optimistic, pessimistic, that could have some kind of impact on the euro, but mostly the euro is beating on its own drum. The Draghi disappointment last week, they didn't do enough, and its work as a safe haven currency, as a funding currency. Figures from today, from the eurozone were disappointing. French CPI dropped 0.2, worse than expected, but it's not a top tier indicator. Okay. So euro Swiss still below the previous levels, but well within the range. Okay. So I guess we have some more headlines from the Swiss National Bank. Inflation is expected to be negative in 2015, minus 1.1. As aforementioned, it's easy to make forecasts for 2015 in the last weeks of 2015. Swiss franc still significantly overvalued. We know they don't like it at all. And we talked beforehand about the QE. So if the Swiss National Bank says the Swiss franc is significantly overvalued, it's different from unhelpful. Okay, the Swiss don't like it at all. Swiss franc should weaken over time. It's a combination of desire, wishful thinking, and readiness to act. And yeah, they said they will remain active in Forex markets as necessary. Okay, so it's no secret. They said it once again. Swiss National Bank is here to intervene. And yeah, negative interest rates, which haven't changed, but they're expected to keep the pressure on the franc. That's from the Swiss National Bank. Okay. All in all, they want a weaker franc. They didn't get it because they didn't cut rates, but they vow to keep the pressure on. Question: can you point a link to learn about the BOE and its policies? Well, you can just look at the Bank of England, but let me try to get something more substantial from you. So this is the homepage of the Bank of England. It has nice pictures. But let's look at the interest rates, okay? You can look here. We put that on the screen. Okay, so more specifically in this website of the Bank of England, here you have a link to Monetary Policy Committee decisions, minutes, and forecasts. Okay? And another thing to look at is the quarterly inflation report that they publish every 3 months. If you want to really make a deep dive. Which is right here. Okay, so that's lots of information to dig into. Basically, recently they were sort of pessimistic, dovish on inflation, even though wages are rising and unemployment is falling. Okay. Anyway, it's time for the wrap-up for today. This is the wrap-up for the live market open on Thursday, December 10th. We covered the Swiss National Bank's decision first and foremost during the show. So the Swiss National Bank decided not to change interest rates, to leave the negative deposit rate at minus 0.75. That led to a strengthening of the Swiss franc against its counterparts, most notably main trade partner, the Eurozone. Euro-Swiss fell exactly to 108, very suspicious, and from there it rose back up. Perhaps they accompanied their decision with an intervention. A main reason not to act this time perhaps was the decision last week by the European Central Bank that decided to cut the negative rates, but not too far. So we have on one hand a stronger Swiss franc, but on the other hand, perhaps some kind of intervention. And they said they're willing to intervene in the future, which is not a change of policy. They will remain active in markets, and they see the franc as significantly overvalued. So that was a conclusion of the decision by the Swiss National Bank. Dollar Swiss is a bit higher also. Okay, and let's see what else we have in markets, what we had and what we'll have. Okay, so we had yesterday oil prices continued struggling despite a drawdown in inventories. This has impacts on emerging markets. For instance, the South African rand is just collapsed yesterday. The Chinese yuan was devalued. Other emerging markets are feeling the heat as well, especially those exporting. This flow into safe havens. Safe havens mean that includes the euro. Euro dollar jumped over 110 yesterday. Now it's sliding back down, back below the Draghi high of 109.80, but the euro still gets some safe haven flows. Okay, pound dollar got carried away, 151.66. Today we have trade balance from the UK just after the show at 9:30. More importantly, the Bank of England's rate decision. First thing, watch the pattern of the voting. It was 8-1 against policy change. 1 voted for hike. If we have the same pattern, it's pound positive. In the immediate reaction, if we have 9-0, it's pound negative. And then we have to look into the minutes to see what how they see the Eurozone, for example. We talked about how they see other inflation, wages, things like that. If they provide any hint about when this elusive rate hike in the UK will ever come. Getting back to safe haven currencies, finally we had a breakdown of dollar yen. It was in a very tight range very distinct, very clear range for a long time, 122.20 to 123.60. Boom, collapsed to new support at 121.10. 121.50 is pivotal line in the range, and 121.90 is next resistance, keeping a safe distance from the previous support line of 122.20. Dollar CAD, all in all, some stability in the Canadian dollar, but way above the previous highs for dollar CAD. 135.50, 136.20 establishes itself as resistance. Support still 134.60. Aussie dollar rose nicely because of an excellent jobs report. Looks too good to be true, but good enough for the Australian dollar to recover despite worries about China, despite falling commodity prices. Flirting with 73.60 resistance, 72.80 is support. Kiwi dollar enjoyed a hawkish cut, which is hard to understand, but maybe make it simple. And Reserve Bank of New Zealand was expected to cut rates, so no surprise there. The surprises came from the tone. They said that rates are expected to remain steady, and they were not complaining too much about the exchange rate, only saying it is unhelpful. So with no further rate cuts in the horizon, Kiwi dollar is back to the high range between 67 and 67.90. Further resistance 69, support 66. Okay, what else do we have today before we answer some questions I see here? We talked about Swiss rate decision, no cut, stronger franc, UK trade balance, UK rate decision and meeting minutes, jobless claims in the US as usual at 1:30, import prices as well. As usual with the bulk of US releases, if all of them go in the same direction, it can have an impact because these are not top tier figures. These are, well, second tier, still important jobless claims, but if jobless claims come out better than expected and so do import prices, it's dollar positive. If both come negative, it's negative for the dollar, but they could also go in different directions. And the Bank of England's Mark Carney also speaks at 6:30 GMT. He already spoke this week, and it wasn't about monetary policy, so I'm not sure if it'll have an impact, especially after the rate decision. But if you're trading the pound, this is a time to check out what Carney says. Okay, that's the events for today. Now let's answer a few more questions. Perhaps some non-institutional source or external commentator. Well, speaking of external commentators, you have myself. You have lots of smart people on FX Street as well. So lots of commentary. Like the guy pointed yesterday, follows the SNB. Ah, I see. Yeah, George Dorgan, well, an expert for the Bank of England. You have many ex-MPC members, Danny Blanchflower and Adam Posen, Charlie Bean. All of them speak, Kate Barker. All of them tend to speak quite a lot. Andrew Sentence. All of them have lots of commentary about the Bank of England. Some are hawks like Sentence, some are doves like Blanchflower and Posen. But someone that analyzes solely like George Dorgan with the SNB, I don't have. Comment from Jax, low oil prices are great. Can fill a car for a lot less these days. Yeah, it's mostly positive, mostly good news for especially for the US consumer, because there are low taxes on oil in the United States, which means that any change in oil prices has an immediate big impact on fuel. In addition, Americans use cars more than anybody else, so it really makes a difference. In Europe, it has less of an impact because taxes are very high on oil prices, and so the movements are a bit less profound, and it's an absolute tax. And also, at least here in Barcelona, we have really excellent public transport, and also other European cities in general have better public transport systems than in the US, so it has less of an impact. But remember, oil prices are good for the US consumer, but are bad for the US oil industry. So far, it's mostly positive, but not 100% positive. Okay, so I guess that's it for today. Another look at US Swiss before we go. Still lower than before the decision, 108.27, but up from the lows, jumped from exactly 108. I suspect some Swiss intervention to accompany a no-cut decision. Okay, so that's it for today. Thank you everybody for coming, and thank you for the great questions. We'll be here tomorrow talking about the Bank of England, previewing next week's events, previewing Friday's events, of course, tomorrow's events. So thank you everybody. Wish everybody a safe and successful day. And so see you tomorrow, and bye-bye.